Hey, Kelly. WealthFront has really been known for more passive investment vehicles, also known as robo-investing. The company announced some new features that give clients a little more say over what goes into those portfolios. First, it's planning to let clients invest in crypto. WealthFront is also letting clients edit existing portfolios by adding or deleting ETFs and build portfolios from scratch. It's also letting clients choose to invest in specific categories like socially responsible investments, for example, and technology. Joining us now to talk about that in a CNBC exclusive, Andy Ratcliffe, co-founder and CEO of WealthFront. He's also a founder and former partner at venture capital firm Benchmark. Andy, great to see you. Thanks for being here.
Thank you for having me.
Of course, we got to start with what sounds like a big change to WealthFront's strategy. In the past, you've really described this company as more self-driving money, kind of a set it and forget it investment vehicle. Has that thesis changed? Should we expect WealthFront to move more into active investing that we've seen a lot of this year?
Heavens no, nothing has really changed. We've just allowed our clients to express their values more. You know, people want to be able to control things even if they don't control them. So the only change is we let them make edits and make changes, but everything is still automated. We still reinvest your dividends in a tax efficient and automated way. We rebalance your portfolio, and we apply tax loss harvesting, which creates value that is a multiple of the fee that we charge. So all we do is give you a little bit more say.
I've got to ask you about Warren Buffett's comments at Berkshire Hathaway's meeting on Saturday. If you haven't seen them, he essentially called the current investing frenzy a casino. He called out Robinhood by name, saying that it's driving casino-like trading activity. I mean, what did you make of that? And do you agree about some of the trading behavior and what's gone on with some of your competitors?
Well, sure, but we see this about every 10 years. You know, we saw this in the late 1990s with the internet bubble. We saw it around the time of the financial crisis, and now we're seeing it again. Whenever the market goes up by a sizable percentage in a short period of time, it drives the creation of day trading. And we know that that never ends well. And every new generation has to learn this lesson for themselves. They're not going to take the advice of their parents or older people who were hurt by this. They have to learn for themselves. So all I see is the same. History might not repeat itself, but it sure does rhyme.
Andy, it's Kelly here, and thanks for joining us. Just for those who say, you know, if you pitch yourself as kind of the safer investment vehicle, you've got the bumper lane, so to speak, but you're going, or you're still allowing access into crypto. Just to kind of explain that move, what you're allowing there, and why you describe that as different from kind of the other casino-like platforms and trades that are coming under criticism from the likes of Berkshire Hathaway?
That's a great question. So our target audience is millennials who save, so people who are 25 to 40. We also have a bunch of Gen Z, but because we're only software-based, we do everything in software. There's no advisor to talk to, although we do have outstanding customer service. It really appeals to a younger audience. The younger audience, we know, has a great interest in cryptocurrency. So we're different from others in that we're a fiduciary. The others who enable casinos are not. So what does that mean? Well, number one, we tell you about the risk that you're likely to incur by adding specific investments, be they ETFs or crypto. And number two, we're going to limit the amount of crypto that you have in your portfolio because we want this to be a responsible investment.
Shepard Smith here. Thanks for watching CNBC on YouTube.